think that's where we're going to have to start pushing for controls like an MDR or EDR, because AI is going to be sophisticated enough if leveraged by the threat actor. They're going to be able to then circumvent or bypass or have the ability to bypass that particular control.
Welcome to the Leader's Edge podcast. I'm Sandy Laycox, Editor-in-Chief of Leader's Edge. In this cyber risk conversation sponsored by Nationwide, I talk with John Butler, Cyber Product Lead at E-Risk Services. We are focused specifically on cyber risk to the middle market in this conversation, and we start off by discussing the cyber threat landscape for this group, including the growth of third-party risk.
Right now, the market is seeing evolving threat complexities. That is due to the rise in AI being leveraged by threat actors, as well as geopolitical instability and supply chain vulnerabilities that we're now seeing can bypass traditional defenses for those that have proper or what would be considered best practice security controls.
Can you tell me a little bit more about the supply chain vulnerabilities?
No, absolutely. So what we've been seeing over the last, say, 18 months or 2 years even, is that we have different components of supply chain. So it's not supply chain in how one thinks about distribution of product and so forth. Supply chain here has to do with if an insured has vendors that they are doing business with that have some sort of connectivity between the insured and the vendor, or even having vendors that provide some sort of non-technical service. They may end up being vulnerable because of they could be vulnerable based off the threat actor utilizing the vendor as impersonating them to then commit some sort of fraud, and that goes to the social engineering and as well as wire transfer fraud that happens in today's world, and that goes to the supply chain, as well as your software. Sometimes you're going to see software as a service as being a prominent way of our world as a corporate commercial operating for our business to operate. And so you're starting to see ripple effects of threat actors that are able to get access to the insured through the vulnerabilities of the of so-called software application that's being provided by a third party or a vendor of theirs.
Do you feel like the middle market segment is adequately covered for this?
That's a great question. And that's going to be one of those questions that I do get a lot, especially talking with brokers and other professionals within the insurance industry that look at that sees cyber as a very young, even though it's a young product, even though it's been around for almost 20, a little over 25 years, we're just now starting to see some maturity within the claims data. But it's been around for quite some time. You do see that because they are middle market, because middle market is really makes up a lot of your small business, and even maybe your more national with some international presence. You may have that limit adequacy question, where do they carry enough limits that reflect their budget tolerance, or even modeling their exposure, or have the ability to model their exposure. That tends to form some gaps. And so it's very important for companies in the middle market to really understand their digital assets. Digital assets is very key, because those are the access points that I can talk about when we're talking about the security controls. There's a lot of times, and you see this when your claim comes through, is that an insured or someone that is, middle market business, they may have certain controls in place, best practices, which would be like MFA, which is multi-factor authentication, or endpoint detection response, or even next step further, they may have a managed service provider providing a managed detection response kind of platform, which allows for them to monitor the activity on their infrastructure so that they can then be alerted and notified. And then if there is a vulnerability, can be once it's been detected, can be then remediated so that there isn't an issue with a threat actor exploiting that vulnerability. And sometimes what happens is that they may not have the the technology, the tech personnel to be able to then service those sorts of risks or the exposure that comes from all the infrastructure of their network. And so that's where we're seeing some of the gaps in not just in coverage, but just gaps in the resilience or the cyber resilience of their defenses.
We then turn to AI, discussing what exposures the middle market has with AI use and where it might show up unexpectedly in their claims.
Artificial intelligence is going to be, I think, the next emerging risk that cyber was, say, 3, 4 years ago when we were talking about silent cyber.
Right.
We're probably going to end up talking about silent AI exposure, which that means that not only do we feel that the cyber policy is right now in its current state best suited, but you are going to start seeing, because of the use of AI, that's going to broaden out where other lines of coverage is going to will come into play,
Mm-hmm.
especially if you're talking about AI and the use of uh, emerging for there to be maybe, say, bodily injury. So when you talk about autonomous technology, where you have, unmanned driving cars, and somehow there's a vulnerability within the technology that allows it to be autonomous, now you got some risk there where are you going to have an E&O claim because of the bodily injury? Is it going to fall under the general liability, auto liability? You have also then if there's property damage, property coverage, or is it going to be, other? And then also then you have the situation of the D's and O's, the D's and O's of those companies. Is that going to have an emergence of an effect on the directors and officers coverage, as well as EPL using AI with respects to employment platforms or software that where they use AI? And so now you have that bias discriminatory exposure that could come into play.
So do you feel like these all of these risks will creep into a cyber policy per se, or that is what you're thinking might happen?
Yeah, right now, the cyber policy right now may not provide affirmative AI language. However, the policy would respond to a cyber event if AI is if AI is
Right.
being used by the threat actor, or if AI is being used by the actual company. The issue with the from the usage of AI, that springs the privacy
Hmm.
exposure. Because of the way that AI generates their outputs, you need to provide it data, and then that's how it learns. Well, what kind of data are they inputting? And based on what data, what are the governance protocols are that the insured policyholder has in place that are going to be mandated by state statutes. And that's one thing that we're starting to see starting in 2026 next year is that there are already going to be some states that are going to be online for regulating against the governance of AI
Mm-hmm.
for that purpose. And that just kind of gives a little bit more an enforcement mechanism, just like we've been seeing in the prior years with BIPA, which is the Biometric Privacy
Mm-hmm.
Information Act, where we've been seeing a lot of class action lawsuits that come from that particular regulation or statute.
Mm-hmm. Yeah, it does seem like, and I know that the class action lawsuits are, there have been some based on the data privacy laws recently. So
Mhm.
that yeah, it seems like it's going to be a little bit of a messy
It is.
situation.
It is. And going back to the landscape of the market, it's going to be interesting in how the models start changing when we start incorporating more longer tail claims into those
Hmm.
models. I think right now, a lot of the models, there's assumptions within those models where they are contemplating, but I think it's not contemplating enough of that particular part of the risk. And privacy for me is like the elephant in the room, just like Tech E&O is when we add Tech E&O to our cyber policy um, in the market, in our industry. That to me is the big elephants because they provide longer tail than what we have been seeing with ransomware. It, that's technically first party, a lot of the expenses you're dealing with, and so that usually those have shorter tails. A lot of the first party coverage that we have been seeing with ransomware, but it's that liability piece, whether it's the privacy that comes from the liability or now what we're going to be dealing with is more regulatory. I
Hmm.
do think is going to come online to then perpetuate that privacy exposure
Yep.
for the long term, and then providing there to be more longer tail evidence when it comes to when we're looking at the models for cyber.
Next, we look at AI from the threat actor side and how advanced threats utilizing AI are being taken into account by underwriters.
We are starting to see a lot of the AI being used by threat actors. They're leveraging it to basically provide more hyper realistic, and I use hyper because you'd be amazed, like you'll get emails or the emails that are drafted are almost exactly in the tone
Yeah.
of who that person it may come from. And so it can be it's going to eventually get very, very, very hard to distinguish the phishing emails as well as any sort of spoofing or deepfake ploy
Yeah.
to be able to get you to do something for them. And in this case, most likely it would be the transaction of money is where the theft is going to be coming from. Also, on the privacy side, we probably are going to start seeing issues where AI is being misused by employees,
Hmm.
where when you misuse it outside of, say, the policies and the governance of the employer, you put yourself at risk for any sort of leakage or any sort of data privacy violations when it comes to the idea of the authorized use or unauthorized use of that particular data that's being used for purposes of output
Hmm.
when it comes to AI. And the other thing is also that we're really seeing is the ability to enhance or really truly engage in best practices on hygiene and the controls around all of your data as well as your systems. Being able to put in place proper privileged access, meaning maybe restrict access first before giving everyone access. You kind of go the reverse, go to more of a closer to a zero trust privilege access approach, but also making sure that you're having MFA deployed across your enterprise, making sure that you have and some sort of endpoint detection, but that's deployed across your whole entire enterprise, so you're monitoring every single digital asset that may have some sort of interaction with the connectivity of the internet, so that you're managing and monitoring that traffic. Those probably two things are going to be very, very important as we learn more about AI, since AI is completely accelerating the risk models within the cyberspace,
Yeah.
and it makes it for an interesting day. Um, Definitely, it's not dull.
Not dull.
Not dull.
Given all of that, and given all of that risk and how it's accelerating and how obviously the underwriting has to keep changing to incorporate all of this in, do you feel like the market is adequate? Is our premiums adequate to provide the right amount of coverage for these companies that are actively, utilizing these tools?
I'm gonna have to speak it as if it's my own professional opinion. We're definitely in a soft market, and we're in a soft market because of the hard market we went through because of the ransomware, and the 2020. We just saw That's when we really truly saw spike in claims and frequency from the idea of severity and frequency together. We saw that spike. The industry felt it,
Mhm.
and we needed then to basically respond, and we did. We increased rates as much as double digit plus, and so now we're in a market where we may not be at that stage where we were pricing wise pre 2019, but it feels like it because of the softness and the competitiveness of the market with new entrants, and also the ability now for increased capacity.
Mhm.
Before 2, 3 years ago, capacity was an issue because of the number of losses in that 18 month to 24-month period. Um, but I do feel that we are maturing enough to understand that we have now tools to be able to utilize and leverage with respects to the underwriting. And also, we've been getting really, really good at the application process and what to look for, and really laser in on real specific controls that matter. Because if you don't, then you are going to see the claim. Uh, Example, during the years that we're seeing heavily ransomware, it's the cause, not just the cause, but the reason for it was the ability to access the insured's network. And so MFA was critical to be able to be like your first line defense, to be able to at least give yourself a good fighting chance against the threat. Now with AI, that makes it a little, we have to go a next step further. And I think that's where we're going to have to start pushing for controls like an MDR or EDR approach, because AI is going to be sophisticated enough. If leveraged by the threat actor, they're going to be able to then circumvent or bypass, or have the ability to bypass that particular control.
Mhm.
And then for us, we can on our side, we have tools ourselves to be able to understand from an outside in view of the risk, meaning the perimeter, that we can see the outside is kind of like going window shopping. We can at least get a small look at to see like what is their outside perimeter of defenses look like.
Mhm.
And that helps us use that data in conjunction with the application as a way to complement our underwriting. And that's being done throughout the marketplace. We're not the only ones, but that's something that the market has seen as being a way to help with complementing the underwriting because it
Mm-hmm.
is going to get really, really sophisticated as time goes on.
Finally, John shares some key advice for brokers looking to secure coverage for their middle market clients.
Biggest takeaway is I would definitely hone in on or focus on the services that any carrier is able to provide their insured. If you're a retailer or even if you are a broker, that to me, I think is going to be the value add to your insured is what is the market providing in terms of services that can help on a pre-breach basis, but then also understanding like what are the pre-approved post-breach, and aligning some of those elements, so that the insured is better prepared, especially when it comes to an incident response plan. It's good to have in place, you know, who are we calling first and who do we have to engage with first. A lot of the markets in this space have hotlines where they can call to get a hold of a breach counsel, and then they'll quarterback with the insured and then also with the carrier they'll quarterback what needs to happen, and so that a lot of that stress will be relieved from the insured, knowing that there's experts that are now can take that on for them and help them through that incident because it can be very stressful in any with any incident in that respects. But that would be the main thing that I would truly focus on, as well as of course, coverage, making sure that you're getting the most coverage across the board with respects to third party and first party for the client. Because there are going to be situations where you want them to have the more comprehensive coverage versus what we do see is like sometimes you could get coverage for maybe a lesser premium, but it's an endorsement that gets
Mm-hmm.
put onto maybe an existing policy. I would not suggest I would be someone in my professional opinion say that would be a way that wouldn't be what I would try to educate the insured with. I would
Yeah.
try to educate them with the more comprehensive approach with the coverage, but then also with those services that provides in some fashion or form.
That was John Butler, Cyber Product Lead for Nationwide's E-Risk Services. Thanks for listening. I hope you enjoyed our conversation. Subscribe to the Leaders Edge podcast at leadersedge.com.